The IRS just dropped some big tax changes that's going to go into effect for the year 2026. These came out on October 9th, 2025, and there's definitely some information that you need to be aware of. A lot of things are changing, from the standard deductions to income tax brackets, capital gains tax brackets, and if any of you happen to invest in gold and silver, I'm going to go over some information that you definitely need to be aware of. So let's just jump right in. The standard deduction goes up next year in 2026. Single filers get to subtract off $16,100 from their income. A married couple filing jointly, double that. Okay, their standard deduction would be $32,200. Anybody filing as head of household would be $24,150 would be their standard deduction. And if anybody out there happens to be 65 or older, there's some additional deductions you get to take. For a single filer, you get an additional $1,650 on top of that. And for a married couple, $2,050 on top of that. The Big Beautiful Bill has an additional bonus that is pretty generous. Everybody gets an additional, again, if you're 65 or older, an additional $6,000 on top of this and on top of these other figures. Okay, that does end after 2028. And this $6,000 does begin to phase out for incomes of $75,000 for a single person and $150,000 for a married couple. Okay, the marginal tax brackets. Okay, this is the amount of the tax rate that you would pay on your ordinary income, like from your wages. Okay, so these are the brackets for a single filer. Okay, so again, this is after you have taken off your standard deduction, or if you itemize after all those deductions have been taken off, the amount of income that is left. The amount that falls under $12,400 is taxed at 10%. The amount that is over that and spills into this bracket is taxed at 12%. Okay, and then the amount over $50,400 but below $105,700 is taxed at 22%. And you can see all these other tax brackets. You can go ahead and pause and look at this if you would like. Okay, these are the marginal tax brackets for a single person. For a married couple, okay, again, after your standard deduction has been subtracted off, the amount of income that falls under $24,800 is taxed at 10%. The amount that spills over that but is still under $100,800 is taxed at 12%, and so on. So these are our tax brackets for 2026 for our ordinary income. Okay. Now, what about long-term capital gains? Okay, so now the way this works, of course, you start with your ordinary income, you subtract off your standard deductions, or if you itemize all of those deductions, that's your income that's left, and we just looked at those tax brackets. Then if you have capital gains taxes, that gets layered on top and is taxed at these brackets. Now, if your capital gains, this is for a single filer, is under $49,400, that's zero. So that's great. You don't pay any taxes on that. The amount over that and under $545,500 is only taxed at 15%. So you notice it does take a lot of capital gains before any of it actually gets to the 20% tax bracket. Now, for high income earners, okay, your modified adjusted gross income, if it's above $200,000 for a single filer and over $250,000 for a married couple, you might be subject to an additional 3.8% tax on top of this. Okay. Now, the other thing to keep in mind is, we pay capital gains on our investment profit, but gold, silver, really any metal is treated as a collectible from the IRS, not the same as, let's say, buying and selling stocks. And again, these are long-term capital gains, okay, which means you have to hold the asset for at least a full year before selling it. If you, let's say, buy some stocks and you sell it in 6 months, that is short-term capital gains, and that would be taxed the same as your ordinary income, like your wages, under those initial marginal tax brackets we looked at. So, but gold and silver, is treated as a collectible from the IRS, and it is not taxed under these capital gains brackets. It is taxed the same as your marginal tax rate, except you don't go into the 32 and 34% tax brackets. It's taxed under your marginal rate up to and capped. You'll never pay more than 28%, okay? But gold and silver, it's a collectible. That's how the IRS views it. And therefore, it's taxed as ordinary income, but it is capped at 28%. And then for a married couple filing jointly, the capital gains rates are pretty generous. Again, after you have subtracted off your standard deduction, you take your capital gains layered on top of your ordinary income. And if your capital gains is under $98,900 next year, it's taxed at 0. Over that amount, all the way up to $613,700 is only taxed at 15%. And then if any of it spills over that, it's taxed at 20%. Again, same thing applies here. If your modified adjusted gross income for single people is $200 or $250 for a married couple, it might be subject to an additional 3.8%. And again, gold and silver does not apply here because that's viewed as a collectible from the IRS, unfortunately. So there you go. There are all the tax changes that's going to take place starting January 1, 2026. I hope this has been helpful. Please hit the like button. Let me know what you think of these new changes to the tax laws, and thank you for watching.